The fundamental thing is going to be we're going to be de-risking. We are, which is the vocabulary that Europe uses a lot more than we do, and de-risking where, unfortunately, where a real challenge for the emerging markets and developing countries is going to be China, because we, and the bipartisan view is that China represents a risk.
Or a threat.
A threat. And, I think at this point, there's very little evidence of that. China's behaved, a little, I would say, naughty in the South China Seas more aggressively than I think is in its own self-interest. And it's made threats to take over Taiwan. If you take those threats seriously, you have to say that you need to de-risk. So in that, but it hasn't done beyond that a lot. But we read those signals very strongly. When I say we, the national security and both parties have read those signals very strongly. And so we're taking very aggressive de-risking. And that's an opportunity because all that production, which is in China, will be moving out. Right now, we're in the first stage where there's what I would describe massive circumvention, where goods go from China to Vietnam, China to Mexico. That's just changing the pattern of flow. I think in the next stage, we're going to see a strong U.S. reaction to say, we don't like that circumvention. We're going to have stronger rules of origin. Again, really bad for the seamless world where we were working after World War II, where borders didn't matter. But in that new world, being on the right side is going to be very important. And that is going to be a big opportunity for emerging markets and developing countries, provided it doesn't get too tense where, say, Latin America, which exports a lot of the raw materials to China, isn't told, if you continue to do that, you won't be a place where we feel comfortable buying from you.